Welcome to Drill On Earnings. We have quarterly results from Fabrinet. It's the business story about one stock on a move, and the stock was moving up and it was moving down. And after hours trading, what's up? The chief market strategist for Epistrophy Capital Research, Cory Johnson. And here is the Fabrinet story. First, let's talk about the beat or miss stuff, whatever. Q2 earnings, beat estimates, beat their own guidance, both in terms of revenue and earnings, and a pretty strong quarter for this company, doing well over $800 million in revenues and a very profitable business as well. But there were some concerns in after hours trading about some of the commentary about how they beat these results. Let's talk about it. So AI powers this business like so many, 17% revenue growth, just about the same as last quarter, not the acceleration of revenue growth that we've seen for the last few quarters. This company fundamentally is in two businesses. Like most companies, they make doohickeys, widgets, whatever. In particular, these doohickeys are the things, they're optical transceiver devices that plug into the back of data transfer devices, whether it's in a data center or in telecom. And those are very different businesses. And usually when one is doing well, the other is doing poorly. They've given us the indication that both are starting to recover. And certainly we saw that in the quarterly results, but they're saying the best is yet to come, which is to say, it's not here yet. So operating margins profitable at 10%, that's fine. That's not great. Not even as good as this company's done in the last year. But when you look at what their business is, are they in automotive? Yes. Are they industrial lasers? Yes. They're in some other stuff? Sure. But Datacom and telecom are most of this business, and Datacom has kind of come out of nowhere for this whole telecom business to become their largest business, but the growth rate is slowing down. So the growth rate for Datacom is down now to 9% on a year-over-year basis when it was growing at triple digits just a year ago, still growing. Now their biggest business, but maybe a little disappointing. When we break down the different businesses this company's in, I mentioned optical communication, so transceivers, modulators, optical amplifiers, line cards, silicon photonics, very interesting thing going on in the world of silicon. They're in the automotive business, very important in LiDAR and all the self-driving cars, autonomous cars, all that stuff, LED and laser lighting as well, important for them, temperature and control stuff using this optical things. But really the Datacom business, the optical communications business, is the most important business for this company. And while it had seen fantastic growth, it's become their biggest business, still slowed down a little bit. And then the telecom growth we've been looking forward to and seeing a little bit of in the last year has slowed down this quarter. So what's up? So in the conference call, they talked about a customer, one of the customers they could name, Ciena, that giant maker of networking software, telecom-focused networking software. They have this huge contract win for some products they're going to ship in the second half of this year. And they say that's still on time and it's still going to happen. But as a result, the growth in telecom they say is definitely going to happen in the second half is not happening yet here. Now they have a new factory adding a lot of capacity. They're also talking about, in the data center, a brand new paradigm of 1.6 terabyte datacom connectors. Think about AI data. Think about what OpenAI does, or Gemini from Google, or Llama from Facebook. They move massive amounts of data within a data center, often using NVIDIA chips, moving a thing from one pile of servers to the next at incredible speeds. 1.6 terabyte is going to dominate this industry for years to come, starting in the second half. It's just not there yet. They say it's going to happen. They say the capacity ready. They're ready for the orders when the orders come. Maybe it's waiting for Blackwell to get into the data centers in size. They say it's ready. They say it's second half, but it's not right now. Maybe that's a little bit of a disappointment. So when after I was trading the stock, eventually, while it's gapping up, settled at down 2% in after hours trading after basically being flat, a 1% gain over the course of this last year. But an interesting quarter from this company. Another interesting thing, of course, going on in the world is tariffs. Where are we? In my case, I'm in San Francisco here in the Ferry Building. But tariffs are a concern for everyone all over the world because of what's coming out of the White House, the Trump White House right now. So what's going to happen to these guys? They make stuff in Thailand. It's where their great new building in number 10, where they're adding all this capacity, $1 billion of capacity or so. They've got other facilities in Thailand as well as one in China, one in New Jersey, one in Israel, and another one right here in California. So, and more of a sales facility here in Northern California. So what's happening with tariffs was a big question, the elephant in the room. They were asked about that. Here's CEO Seamus Grady.
Keeping a close eye on that, based on where our factories are located, so far at least, we haven't seen any tariffs being imposed on China. So we don't expect any negative impact. If anything, we maybe expect a potential positive impact if customers want to move production, if with the most recent tariffs, a lot of the supply chain in our industry, if you like, is still, a lot of it is in Mexico and some of it is still in China. So we're quite happy to work with the customers if they want to move production to in our direction. So if anything, we see the tariffs, leaving aside the kind of macroeconomic impact, which I'll leave it to people smarter than me to talk about, but just in terms of the demand and our ability to win business, we don't see tariffs as a headwind. If anything, we think it could actually help us a little bit, but it's very early days.
So yeah, it's early days. We don't know what's going to happen with tariffs from hour to hour, yet these companies trying to make plans about how to run their business and where to run their business. But on the margin, maybe this company sees some benefits from this because they're not in Mexico and they're not in Canada and they're not in China. And that seems to be capturing the ire of President Trump. But what's it all mean? What's your big drill on earnings takeaway? And what's the one number that tells us a whole lot? So here it is. Fabrinet second quarter earnings. The one thing to remember is this company did over $800 million in revenue, the biggest quarter they've ever had, 17% year-over-year growth. You would think that's all good, but the datacom business is slowing down, and that's what gets us to the drill down earnings bite, the one number that tells us a whole lot. The datacom business that was growing at triple digits a year ago is down to 9% growth on a year-over-year basis. This company says it's going to increase at the end of the year when they get to 1.6 terabyte product, but it's not there yet. They say the second half, that growth is going to kick in a big way. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson from Epistrophy Capital Research. Check us out on X at Cory TV and on all of the socials. Subscribe. We'd appreciate it.